What's up YouTube, it's Louis here. I hope you're all well today. What an insane day for crypto. It took an absolute shit on us, didn't it? Well, first of all, I'd like you to, of course, please head over to my Twitter, because I was making updates earlier on today in the morning about Bitcoin, Quant and HBAR, because HBAR, is taking the biggest shit out of all of them, but apart from FTX. But please follow my Twitter, Louis_crypto. We're almost at 1.5k followers now, just 30 more. But yeah, today's daily close is the most important we've seen in a while across all of crypto, as we're at the 2017 high. We need to see this hold of support essentially, guys. That is $19,666. So if we're closing below this, and we will go into a bit more detail about some new key supports, but essentially if we are to close below this, then we should be heading towards 18.6k essentially. So what we need to see is a close above the 2017 high. Otherwise, this move that we've seen above the 2017 high could be a fake out, because we have got above it. So we need to see it hold a support. Every time you've come above and you fail to hold its support, where did you end up going? The lower band, so the lower support. So that's why we need to see the outside finally held. I know you're below this, but as we were coming down over here, I said it's actually okay to come back down to 19.6k, if you remember from last week. But we actually held the bullish cross and continued. So that's what we need to see going forward. We'll go into a bit more detail about some key levels I want to see reclaimed, or just some levels that would be even more bullish if we were to have reclaimed it. But yeah, main objective today is to hold this 2017 high, and of the other main objective is to get you following my Twitter, as I will be doing a giveaway this week for a course for reaching 4,000 subscribers on the channel. So thank you guys. Unfortunately, I've had a few people wasting my time in the private messages over the last few days, so I kindly ask don't do that. But let's get rid of these fibs, because I actually already recorded this video, but I think my mic was too loud. Let me know how the mic volume is as well, because I'm using my mic this time. But let's get rid of this all. So essentially, we ran into this key resistance, our golden pocket. So it's nice that we got pulled like a magnet towards this, as we were saying. However, instant rejection from this area, not good to see. So the golden pocket begins at the 050 until the 0618. In this case, we did drag it up to this wick, because usually if we didn't have the golden pocket here, we would essentially say, let's see a daily close above that, and then that would be a go signal upwards. But we have a massive zone of resistance. Here we have a double bottom neckline, and we were holding it as resistance over here, and we're just running into it again. So that's why we've, as I was saying, even though this is, even if you are bullish, you have to expect a rejection from here. And yeah, essentially when we were back down here, we were saying it's actually fine to come back down to 19.6k, because you haven't confirmed it as support. So going forward, that's what we need to do. I'm going to add some new fibs onto the chart from the lowest point to the highest point afterwards, and you can see we started dumping, so I know that's fine to use the fibs right now. And if we were to draw out a golden pocket and drag it into the past, we can see in and around the 2017 high, a little bit further down, exactly to where we wicked off, is the 0618, 19,355. So let's just get this exactly, yeah, 19,360, my apologies, and we've wicked off that very nicely just now. So there's a little bit of demand here. Essentially, if we ignore all of these zigzag moves and we take it from the bottom to the top, right there, that's your move. So your move is just a straight line like that, and we're moving back down towards the golden pocket. So this is our exhaustion phase. We need a continuation phase to the upside. That's what should happen, bearing in mind that this holds as support. So if we do hold this golden pocket as well as the 2017 high, this is just a fib retracement. You've had this push, and now you're just retracing, exhausting before continuation upwards. If we were to fail to hold this as support, if we close below 19,360, you'd validate the reversal wave essentially. It's not what should happen, but we have to always be prepared for the bearish scenario. And so if you were to close a daily candle again below the 0618, 19,360, it's a signal you're heading towards 18.6k. Really, that's a signal you want to lose the low. But of course, there are supports here that may stop this. But again, if we were to lose the low, you can see our target would be at around $16,000 with further 2 targets if we fail to reclaim this level. So if we head down to there and we fail to reclaim this green level, we do something like this, we'll continue down essentially. So the targets would be 14k. We have spoken about 14k and a lower target at 10k before on the channel. We'll get into that in a bit more detail. It's something that actually a student of mine, we've been talking about during the mentorship lessons over the last week. He was asking, is there any possibility we could actually go down? And I said yes. Although we invalidated all these bearish patterns to 14k and 10k, look, we have a new confluence at 14k now. It's a 2414 target. Forget that for the moment. I want to show you the pattern itself. Shoulder, head, shoulder. Your neckline was always 18.6k, but with the descending triangle, it was also 18.6k. We were always warning that there's a bullish pattern, inverse head and shoulders, as well as a double bottom over here potentially forming, but you do need to break the neckline. What we're doing down here is amazing though, because we're holding the low, we're creating higher lows. So that's good early signs that we're coming up towards the magnet, which we've now seen do. So that's our key resistance that we're dropping from. It's not going to go up in a straight line like we all wish. The longer you've been in the market, you'll know that that's not the case. So everything's like in levels. So this was our resistance, this was our support. We were trapped in this level, and the level above is this between here. So we got into it, we ran into the top. Now we're going to the bottom of the level. If that holds, we're going to break through that. Then we have another level over here, essentially like that. So it's always going to take time. It's not going to go up in a straight line. I wish it did. If it does go through like butter, it starts to get a bit scary, because you haven't confirmed its support. You could fall back under it, could flip it into resistance and head lower. So exactly what's happened here. You push through it, went back under, went back above, held it as support in the short term, ran into the key resistance of the descending triangle, pushed you back under. So this is an area where we can see fake outs essentially. Oh, my mistake. There we go. So what we need to see is the 2017 high closing above it as support to head back into this magnet. Because if we do lose it, we have the bearish scenario. Again, what we were saying in the lesson with my student, the mentorship lesson, was that even if you do lose 18.6k again, you would actually validate the old bearish target. So although we actually broke out of the apex to the upside, validating 30k up here, if you were to ever lose 18.6k, because it was previously the neckline of these bearish patterns, the descending triangle and the head and shoulders over here, because that was the old neckline, it's still valid technically if you were to ever lose it. Right now, that's not what should happen. We're above it. So our as long as we're above this red line and 18.6k, which we actually are right now, the expectation is eventually 30k. That's the expectation right now, as long as we're outside the red line, which it looks like we have to be. And then of course, the only worry is if we ever do lose 18.6k, then yes, you will not go to 30k. You will actually go to 16k, 14k, and 10k. That's the patterns targets out of the descending triangle, as well as the head and shoulders. So to invalidate that, or to not see that, we just need to remain above 18.6k. And the second step is hold above the 2017 high. You've held this floor, let's hold this floor now. It's something that we have not actually done yet since breaking above. So that's why if we were to fall below, you're creating something called a fake out. It means this move upwards is just fake. You actually want to go downwards. It was like it's just market manipulation. It's what you see in a bear market. That's why we haven't been trading so much. I think our first trade back was only back in September, and we hadn't traded since May. Between May and September, no trades, just looking to invest. And we invested around 25 to 17k. We started investing up there. I told you on the channel as well, and the reasonings, and we invested down here because a target of ours was met. So since then, since June, everything's been playing out as we've been calling. It's just everything takes a while. We were saying all the way back here we're expecting a large double bottom or an inverse head and shoulders. It's essentially what we saw last year over here. Although it wasn't right at the bottom, as in last year it was. I bought the exact bottom on my birthday. It was literally that wick over here. But we had this shoulder head and shoulders over here and the neckline over here. You validated it but invalidated it by quickly going back under. Oh, awful lines. But yeah, by quickly going back under this key resistance over here, you invalidated the upside. And of course, by losing this low, that was my signal to all of you, I'm getting out of crypto, because you lost the weekly. I know this is the daily, but that was a weekly higher low. And if you're losing a weekly higher low, that's weekly bearish. What's the point of being in crypto? So next time I do see that in the future, I won't just sell 50%, I'll sell more, because I actually made money by selling, guys. By selling, I managed to get more coins for the same amount of money. And so that's why I always urge, if you do see a bull market flipping into a bear market, what's the point of being exposed? What's the point of exposing your money when you actually know it's going down? Only in those moments I decide to sell, not really buying and selling each top. You know what I mean? That's, if you want to do that, that should be a separate account to your investment account. That should be a trading account. If you want to be taught how to do all of this, head over to my Twitter, Louis_crypto, where I do teach you. That's pretty much it for today's update. Let's hit 100 subscribers, 100 likes on the video. Let's get some comments to boost the algorithm. If you do want to send in a super thanks and support the channel, please also do so. Check out the memberships if you want. There is early access to the videos. If you want to take up on the education, again, yeah, that's over on my Twitter, Louis_crypto. Just private message me. But also this week I will be doing a giveaway on a free course. Thank you guys. I'll catch you in the next one, and as always, peace.